Assalamu alaikum. Have a good day. Welcome to Financial Management eLearning. We are going to discuss the process costing system under the cost accounting here. In Module 16, the domain of nature and characteristics of process cost system. We will discuss process costing, objective of process costing, characteristics of process costing, comparison of job order and process cost accumulation system, production by department, system flow, determination of equivalent units, the cost of production report. In process costing, costs are accumulated by departments, operations, or process. The work performed on each unit is sterilized or uniform, where a continuous mass production or assemble operation is involved. If we see here, direct material, direct labor, manufacturing, applied overhead goes to the work and progress inventory at department of 1, 2, and 3, and then finished goods inventory, material, labor, manufacturing overhead applies is within the work in progress under Department A, and the finished goods of Department A transfer to Department B as in work in inventory, and with the direct material, direct labor, again the finished product of Department B it's transferred to the inventories work in progress under the Department C, and within this Department C, direct material, labor, etc., and from manufacturing overhead applied within this item, finished goods, inventory, it also transfers the cost of goods sold. Process costing, cost flow, if we see here, and if we see process costing is used by companies that produce appliance, alcoholic beverages, tire, sugar, breakfast cater, leather, paint, coal, textile, lumber, candy, coke, plastic, rubber, shoes, etc. The process costing. Distinctive feature of the process costing is that all of the process within this, all of the products within. So one of the distinctive features of process costing is that all the products in a process can be identified. And for this reason, the average cost per unit is calculated for each process, and expected output is what we expect to get out of the process. Another main feature is process costing is that the output of one process from the material input of the next process. Look here, if we put the input under the process within the labor, material overhead, and then outputs will as a output transfer as a material process 2, and with the additional labor, material overhead taking process 2, and output of process 2, it's transferred to the process 3 as a material, and within that additional labor, material overhead in process 3, the finished product can be produced. So this is the process. Look here. So also where the closing work in progress at the end of the one period, this prompts the opening of work in process at the beginning of the next period. So we can say the process costing refers to a cost accounting method that is used for assigning production costs to mass produced goods. So cost accounting, if you look here, process 1, current term consumption plus beginning work in progress minus ending work in progress, so finished goods cost if we divide the finished goods quantity, then we can get the cost per unit in process 1. And finished goods of process 1 is transferred to process 2 as a raw material of the process 2, and current terms consumption plus a beginning work in progress under the process 2 and minus the ending work in progress under process 2, then we'll get the finished goods cost of process 2. And if we divide the finished goods quantity by the finished goods cost, then we'll get the cost per unit in process 2. So here finished goods cost of process 2 is transferred to the finished goods item. So it is the process. So if we see the characteristics of process costing, is a continuous mass process. Each process is deemed as a separate operation. So each process is deemed as a separate operation. The product pursued and completely homogeneous. Output and cost of one process is transferred to the next process until the finished product completed. Cost of raw materials, labor, and overhead are collected for each process. The cost of finished units is determined by accumulated of all cost incurred. The cost of normal and abnormal losses usually incurred at different stages of production, and the interconnected process make the final output by product or joint product possible. So process costing accumulated cost department and that assign them to a large number of nearly identical products. So continuous mass production, similar process, homogeneous product is the process costing. Very much easy, flexible, less expensive, and process costing, and but sometimes it's lack accuracy. Multiple product work in progress is calculation is very much difficult. So if you see here, input process, output, and process 2 is input a material of a process 2 is the finished goods or output of a process 1, the same way, and output of process 2 is input of process 3, and then the final product. We know that there is the different types of method in costing. One is that means a production basis shower costing and process costing. So my previous module was a shower costing, and here if you see that in the behavioral based costing method is direct, that means prime costing, pool or absorption costing, variable or marginal costing, normal costing, and a production based job order costing, process costing, and time based estimated costing is standard costing, actual or historical costing. So process costing method is used for industry, producing ceramic, chemical, textile, etc. Process costing involve the steps of we can say that there are 3 steps. One is a look here, the total cost per process is computed by estimating the number of production process to each produce in a given period, and unit cost per process is computed by divided with total cost per process by the number of unit passing through the process in the given period, and the unit cost per process is charged to each unit as it passes through each process, so that at the end of the production cycle, each production will have received an appropriate charge for each process, and which has the which it has passed. So if we see here, material, wages, manufacturing overhead goes to work in process in department A, and that also in work in progress for department 2 is the input item, and the output item of department B is a direct to finished goods, and finished goods which is the cost of goods sold. So objective of a process cost system. A process cost system determines how manufacturing costs incurred during each period will be allocated. The primary objective in a process costing is to determine the cost of material, labor, and factory overhead used to process units of production through each department, thereby determining the cost of a finished unit. So ultimate objective is to control cost, ascertain the cost of each product process, ascertain the cost of byproduct, know the wastage of each process of production, ascertain the profit or loss of each process, the base of the value of the opening and closing stock of each next process. So is the main objective of a process cost system. So process cost flow, if we see here, direct material, labor, the traceable cost, and manufacturing overhead is the applied and manufacturing process within that item, and this is transferred to the cost of process unit cost for finished goods. Characteristics of a process cost system, it is that aspect of operation cost which is used to ascertain the cost of production is process or stage of manufacture. Look here is that a process cost system as the potato chips production, the harvest of the potatoes. After the second stage is cleaning, third stage slice doing that, and fourth is the fry get dried, and fifth is we're keeping in the look. It is the final product here. Similar product is produced over a specific time period. Use of process cost system, the use of process apply cost of similar production that the mass produce in the continuous fashion. And examples of include the product the paint, manufacturing, etc., and the production over having a continuous flow of clearly defined process cost center at the accumulation of all cost of material, labor, and overhead by the cost center. The maintenance of accurate record of units and part units produced and cost incurred by the each process. And the finished product of one process become the raw materials of the next process or operation, and so on unit until the finished product obtained. So avoidance and unavoidable losses usually arise in different stages of manufacturing and various reasons. Steps to achieve a process costing. First, summarize the physical flow of the unit to produce. Have to calculate the production in terms of equivalent unit, and have to calculate equivalent unit cost, and have to summarize total cost to account for, and assign total cost to the units already completed, and to use unit to ending work in progress inventory. So if you see the format of process costing system, look here, there's the material, labor, indirect material, other expense, total unit, rate, per unit total taka, and a normal loss, a unit transfer to the next process, abnormal loss. And for the format of abnormal loss, if you see here, and format of abnormal loss and format of abnormal gain. So we can calculate net cost of input divided by expected output, and even cost per unit also you can calculate total cost of input or minus scrap value of normal loss divided by expected output. So cost of opening working brought forward to the cost of finished goods, and current period cost of finished opening work in progress, cost of unit is started and finished, cost of unit is started but not finished. So its cost of units is started but not finished is the cost of closing work in process. Started and finished is the total cost of finished output. opening work in process included, and cost of opening work in process with that cost of work in process department with the also additionally use the material labor and gain overhead that make the finished goods, and this transfer to another department as a raw material. The FYI manufacturing companies produce pass-through companies a product pass-through to defined process X and Y, and then to the finished stock. The following data is given: a material consumed process X 6,000 and process Y 3,000, wages and 7,000, 4,000, manufacturing expense 2,000, also for the process Y 2,000. So 10,000 units were brought into process X, and costing take up 5,000. The output were process X 9,500 unit and process Y 8,500 unit. We have to prepare the cost accounting, show the cost of the output within this figure, and it is known from the past experience that wastage occurs in the process as under in the process X 5% of the unit enter in the process, and a process Y 10% of the units entering the process. The scrap value of the wastage of process X is taka 8 per 100 units, and the process Y taka 10 per 100 units. So we have to prepare the process accounts. If you see here the process account X unit introduced 10,000 and cost 5,000. So if we divide taka 5,000 by the unit introduced 10,000, then we will get 50 paisa per unit. So material 6,000, wages 7,000, manufacturing expense 2,000 as given in the question. So it is a total amount 20,000 for the quantity 10,000. So here normal loss scrap 5% of 10,000, it means 500. Okay, so process Y account output transfer, output of process X transfer to process Y. That output would be 9,500. So total input is 10,000 and finished product or finished output of X process 9,500, and because 500 units are normal scrap, so this normal scrap we have to addition them. Look here, work in process cost per unit, total cost 20,000, this 20,000 minus taka 40 for scrap value, because here's look here, taka 8 for 100 units is the scrap value. So 500 multiplied by 8, that means 500 divided by 100 multiplied by 8, then we'll get 40 taka. So 20,000 minus 40 taka of scrap value, if we divide by finished output, that means goods in unit process that transferring for the next process Y 9,500, and so we can say that in the process X total cost per unit it approximately 2.101. So if you see here process Y account output, that means process 2.10 equal to here 0.10 process output, that 19,960, and for the 500 units is the per unit is 0.10 weight as given in the question, because 100 units for taka 8. So here 40, total 20,000. So look here in the left side, debit side of a process X, here total amount 20,000, and also if you see the credit side, here also the 20,000. So 10,000 unit cost is 20,000 baht, and the what output of finished goods of process X transfer to process Y is the cost per unit is taka 210 paisa. Okay, so now process Y. So look here, this process Y deviate a process X account, because this one 9,500 unit transfer from process X, total 19,960 as given here, and also in the process Y use material is manufactured overhead as given in the question, and then if we add it, total expense is 28,960 and quantity is 9,500 units. So again 10% normal loss within this 9,500 units is 950 units, and also abnormal loss 50, output transfer to the finished stock. So remaining 8,500 units, total 9,500 units. So what would be the rate? Look here, cost per unit 28,960 is the total cost minus 95. How we get the 95? This 95 is taka 10 for 100 units for a scrap value of process of Y product. So it's a 0.10. So 950 units multiplied by 0.10 taka, we will get 95 taka. So with this 95 taka and also abnormal loss and a finished goods is we calculated is the cost per unit here. So 28,950 minus 95, then we'll get it 28,865, and if we divide is the total output of finished goods, that means good item. So here here is a output that transfer to finished good 8,500 units, and within this 8,500 units we have to add abnormal loss here. 9,500 unit, if we minus the normal scrap 10% of 9,500, then we'll get 950. So total unit would be 8,550. If we divide 28,865 taka of process Y cost by the unit of 8,550, then we'll get per unit cost is 3.376. So if we put here 3.67 multiply 8,500, we'll get that. So it is the process account of two process. So another, there are two process in a factory manufacturing a single product. Following are the particular of expenses incurred in different process. So process 2, process 1, raw material process 1 is 30,000, transfer from process 1 to process 2 88,000, wages for process 1 26,000, wages for process 2 20,000, overhead for process 1 29,000 and process 2 28,000. The finished stock inventories at the end of the period shows a balance of 21,000 after crediting a process 1 with 5,000 being the estimated realized value of the waste and byproduct, and 8,000 against the process of the balance transfer the process 2. There is no wastage of byproduct in process 2, and the outward the transfer of finished stock account with the margin of 25% of total cost. So we have to prepare the process account with the adapted balance sheet purpose figure. Process 1, material 30, that means a total 30, wages 26 and overhead 29. Credit side, by the sale of byproduct we get a 5,000. By the transfer to the process 2, 88,000 total cost. Within this 88,000, 10% of the profit that will transfer from one department to another department. So it is the inter-process profit here 8,000. So total the 93,000, but cost 85,000, and a profit here 8,000. Total is 80,000. So 88,000 is a transfer to process 2. If we again look here, is the 88,000 process 2 and 80,000 is cost, 8,000 is profit. So wages are adding here and overhead also add here, and profit is 25% on cost. So profit and 25% on cost would be finished a product, a total 1,70,000. So within this 1,70,000, it is 42,000 is the profit. So here 25% on cost, that means 25% on cost is the profit within the department. So it is here, and profit is 34,000, and that finished stock transfer to finished stock, it is the 1,70,000 is the cost. So finished stock account, if we see here transfer from process 2, it is total 1,70,000. Here cost is 1,28,000 and profit 42,000. And we have to compute the finished stock. That means formula cost divided by total multiplied by value of the closing. So cost of a stock is 1,20,000 divided by 1,70,000 multiplied to into 1,000. So cost of it is the 15,812. The value of the stock of finished goods should be shown as the cost of 15,812. So if we here compute the provision of the unrealized profit, so formula cost of inventory, cost divided by total cost and multiplied by closing inventory. So provision for the unutilized profit, value of the closing inventory minus cost. I think it's okay for today. Today we discuss process costing, objective of process costing system, characteristics of process cost system, and we solved 2 problems of process costing system. So next we will discuss another part. We have to do the comparison of job order and process costing, production by department, system flow, determination of equivalent unit, and cost of production. It is a bit much vital for you, cost of production report. So today it's all for today. Inshallah, we'll meet with you again with my next part of this module, process cost system. Till then, take care. Allah Hafiz.